Good afternoon, my friend.
Hey, good afternoon, my friend. Whoa, what a day.
Wait till you see today's cover.
a, a bear mauling a bull.
Pretty close.
A, oh, that's so cute. That's so adorable. Aw.
We have the bear wants a high five.
Hey, Mr. Bear. Yep, that is really cute.
Mr. Bear was very impressive today.
Holy moly. I am so, well, I think we had a double whammy. I think the Fed, remember we kept saying this morning, there's 5 Fed speakers today, be really careful.
Yep.
And they made it sound like we're going to raise rates and it might not even just be a quarter of a point sometimes.
And it got ugly.
And then oil really weighed on us also. So what happens here?
Well, let's add the last piece of the puzzle here, and the one part of the market that you would expect to be a big part of any market rally. We were hoping that this sector stayed above all key moving averages, stayed above the area that they gapped, and it was actually looking pretty impressive 2 days ago.
Right.
But now it looks like the picture is a little more clear, but not in a good way for the bulls.
I am actually, that's the thing that I found most surprising about today. We were down because of the thought that maybe we'll get interest rates, sooner than later, more rather than later. And I thought the banks would be a lot stronger on that.
Well, if we look at it from a price action perspective, without again, a lot of people don't necessarily read into everything as deeply. As a matter of fact, I probably don't read into it as deeply as you do. You're probably twice as smart as I am on that kind of stuff. If we just take the charts and put this price action in perspective, I don't think the bulls should be ready to be bailing just yet. I think that, and again, I keep going back to the weekly chart. And look, I'll be the first to admit, I love shorting just as much as I love going long. But we did have five. I don't know if I would call them ferocious is not the right word, but certainly on this weekly chart, it certainly looks that way, because on the daily, you see like a lot of, there's consolidation in dojis. It's not like every one of these days within these weeks were big green candles that were like, off to the races.
Right.
But we did move a large amount in a very short period of time.
Well, I actually think you mentioned that on Monday morning.
Yeah, and I think that, because look, Mary, most of my trading is reading the tape. Like, I'm not really like a big fundamental person. Of course, I pay attention to the news. I never interpret earnings or anything like that. Of course, I know they're coming out, and I let the tape tell me what's going to happen. I make it very, like, I joke around with people at seminars. I'm always like, I don't want news. I just want the charts. I want it's like I don't want anything popping up out of nowhere. But earnings, earnings and this type of stuff will give us a catalyst. But even that being said, I'm a pure tape reader, and I just pay attention to what I think should happen, which
Right.
I think all traders should. I think traders should know what should happen next, and then if what should happen next does not happen, that means something just as much.
Right.
But that being the case, I mean, we can't have this joyride without expecting some selling.
Oh, I definitely agree with you.
And I think that's a part of the problem, at least for the people that I'm speaking to. And remember, I don't know what night it was. I'm pretty sure it was this week, or maybe it was in the morning. I don't remember. I talked to you more than anybody in my family right now. I don't remember what day it was, but we were mentioning the fact that we really haven't had a pullback, and that people are getting comfortable being long.
You know what? It was you. You had said that, and you said people think that this market is forever going to be by the pullback.
Yep. So, and I see that like with private messages and that kind of stuff. Everybody saying, "What do you think? I'm still long. What do you think? I'm still long?" And it's casual people with other full-time jobs who have not had a reason, for the most part, to have to manage anything. And I'm not saying anything other than this proves what you and I do every single morning which can be a little monotonous to people in the room, which is constantly harping on risk management and
Right.
knowing where you're getting out no matter what, knowing what the trade should look like, knowing if, again, we'll use the SPY here, if it rallies up into resistance, are you scaling out, are you getting out, are you expecting it to pop through, and putting the whole context of everything to, we haven't been able to get through this level all year pretty much, other than like these little blips.
Right. Right. Right.
So
Exactly.
we put the story behind it that, what would the catalyst be to get us through? Okay, if you don't have a significant one, which obviously the Fed could have given us that catalyst, but as of right now, they're not giving us that catalyst. And on top of that, we have this engine that just revved hard for 5 weeks. I don't want the market to go down, but this is normal price action for all the stuff that's going on. You just need to either day trade it, take your loss, or move aside.
Right. 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 Exactly.
So it's great price action if you're in day trading mode, which we have clearly been in. I want to say for probably this period here, like these 3 weeks, as we started to approach this higher level, which essentially, for those of you not in the trading room with us, essentially means that we have a bias on certain stocks that are in clear uptrends or downtrends, but the majority of, let's call them the day trading stocks, the stocks with good liquidity, the stocks with good volatility, we'll name a few. Let's just say, for argument's sake, Facebook, Apple, Tesla, Netflix. These guys that have good consistent liquidity, good consistent volatility, and you can see here on the daily chart. And actually, I think you had said this specifically about Netflix this morning. It's kind of in a box, and we didn't draw this one out. Maybe we could even move these levels up here a little bit, so it's a little bit more obvious. So when it's in a box like that, but the stock, if it offers good consistent trading on a day in and day out basis, you're day trading it, you're using the most recent reference points, and let's actually pull out Netflix here as an example, which essentially means that you're looking at the previous day's high, the previous day's low, and you're going to trade around those levels when market opens around the opening price, because there's really not a longer term bias here, because we also made it clear that we need to get above this resistance level to feel conviction on longs. So as traders, you have to make that distinction. And again, we did a big meeting this morning on how to scan and how to put those stocks in your criteria. And I think it's a little bit of a surprise to newer traders that you need to first put those filtering criterias in before you even start to look at stocks, because you need stocks that match the criteria for how much you can risk, how much volatility you can handle. Like, I forgot who it was the other day that we were talking about VRX. And it was after one of those days where I think it had like a $15 range, I think, if I'm not mistaken. It was just one of those days where, let me pull it out a little bit. Just to give everybody some context, from 260 down to 73 in about 2.5 months. Maybe it was this day where the question came up. You have to filter out the volatility you can handle from a risk tolerance perspective, and I'm not even talking about monetary. I'm talking about how much can you mentally handle, but then of course, how much can you handle with the swings? And we actually put that in the meeting this morning about Amazon. It's it's been on fire, making new highs consistently, but you have to be able to handle a $3 to $5 move intraday.
Right.
So putting all of that together with a trading recap, the market it can't be that big of a surprise if you're even a casual student of the market. Actually, if you're, I take that back. If you're a casual student of the market, you're not aware that there's a natural ebb and flow. That's the normal tape. So you are enjoying the 5-week buying spree that made it very, very easy to not worry too much about trades moving against you. If you are now caught as a trader who was long some positions or is long some positions without a plan other than, how did we word it this morning? The market never goes down.
Right.
If that's you right now, and you still like your long positions, but you don't like the losing position you're in now, you could scale out. That's for sure. You don't necessarily need to say, torpedoes be damned, I'm holding the whole thing. You can still like the position and work the order, right?
Right.
So I think that the market it's doing what you would expect at a massive resistance level after a massive 5-week rally. What do you think?
Yep, I agree.
So let's actually do a really quick, just a quick look at what we were looking at coming into the day, and then we'll take a little bit more detailed look at some of the stocks. So coming into the day, we were kind of neutral. A lot of green, a lot of red, not necessarily, getting crushed on either side of the market. But the actual picture of the Dow, the SPY, is a little bit different because we actually sold off, and right around this time, midday, we actually had a quick text, and we're like, you know what, maybe we got a shot. We got all the way back to the open, but watching the opening price, and again, we haven't been able to get through there. So we closed on the lows, but this was the thing that was a little bit interesting, the lighter volume. So I had two different things that I had on the blog this morning. We couldn't get back above the 20 EMA on the chart. Still above the 20A, but this was the big thing. Could not trade above the open. Less than 68 million shares. Okay, so for inconclusive from a volume perspective, and again, you and I are very big on we need institutional participation to have conviction. But this was the first day the sellers held into the close, because I'm sure you remember, like we've been speaking every day for months now, saying the sellers had their chance and they didn't do it.
Right, exactly.
And again, getting back to, if you learn how to read the tape, that's one of the things you should know. If the sellers are around and volume is really light, they should be able to hammer the market. And they didn't. They weren't around. But it seems like the picture's changing a little bit. Here's the map of the S&P 500. At the end of the day, one or two little pockets around. But for the most part, selling. And again, the financials were a big part of that as well today. And we closed near the lows again. So again, something else that we discussed this morning, knowing what you're looking at and having your frame of reference. You can see the SPY here with the opening price for pretty much the first 90 minutes of the day, above and below the opening price. So reading the tape with that reference point, and it's really exciting to actually see some people in the room basically saying, I understand what I'm looking at now because I have a reference point. Okay, it's above the open, it's below the nothing to do. Then there was a period in here where the trend was going down hard, and it looked like we were going to get this rally. It looked like everything's lining up, and just wasn't enough to sustain it. I wouldn't say I was surprised as much as I was hoping we were going to catch a bid and get back above the 200, but lo and behold, that quickly got squashed. And this is the point that I want to bring up for day traders in the afternoon. The entire afternoon, the SPY was below the opening price. And if we take a quick look at the VIX, and actually let me pull that up on a intraday chart, the VXX, just so everybody has an idea what we're scoping out during the day, that was off to the races. So you had confirmation with the VIX being above the opening price that whole time, and the SPY below it. So again, we're constantly talking in the room every day about building an argument. That was a pretty clean argument where you didn't have to think too much about whether or not you wanted to eliminate the short side, the long side.
Right, it definitely was.
So again, a lot of the stocks that we've been focusing on every day, Tesla continues to get heavier selling days. Now, again, we had new lows today on a little bit lighter volume than we've recently had, but again, it's been closing on the lows since a couple of days after earnings. So the price action is speaking there. Apple has had some news recently and looked okay after, but continuing to trade below that 116 level, which is the level, the 116 to 120, which you can see the resistance over here. So you got to leave these levels on the chart. They continue to matter no matter what. And I have to say, Marion, I don't know if necessarily we're going to see another down day like we did today, where we closed on the lows. I believe we're going to open, unless something happens overnight. I think we're going to open flat. I think we're going to push lower, and then I think after the first push lower tomorrow morning, I think that's going to be an interesting moment. I think that there's still enough people holding on to longs. They haven't gotten out of them yet, where now they're going to be paying attention to the sell button.
Right.
And then I think there's going to be other people saying, all right, this is a confirmed, if this is a confirmed change, and it's clear what's going on with interest rates right now, and the banks didn't react to the way we would have liked to have seen them react, we could have an ugly Friday.
Yep, especially a Friday.
Yep, from a bear market, or I should say a bearish day with sellers coming in and stepping on the gas. So I think one of the better trades of the day, which again yesterday was Dollar General, today was IBM. We were touting the stock the entire morning. but kind of bottomed out here and bounced with the rest of the market. But again, building an argument for putting the pieces together. This is exactly where we just showed you the market bounced. And then once the VIX took off and the market came down, IBM never got above the open. You could have been looking for a spot to sell short this again. And it's not so much this. This is kind of like the effect of this. You want to first have a good idea and then be timing here. So I know we're talking on what the stock did intraday, but the better you get at intraday, day to day, putting great ideas in your list, it certainly makes looking at these kind of charts on the intraday basis to say I want to be long or short. It certainly allows you to have more conviction. And I got to be honest with you, the call outs that we're getting in the room, we don't necessarily need to mention any names, but Elwana is doing a phenomenal job of really starting to get to the point where she's calling out really good ideas. Like you could look at the chart and you could say, wow, yeah, I could definitely see where that's a good idea.
Right, exactly.
So that's my my call for tomorrow and wrapping up today. I think we're going to open flat to lower tomorrow, have the first push down, and then I think that first push down is really we're going to have to be over, what's going on in the internals, what's going on in the trend, what's going on the ticks, any particular sectors trading back above the open. I think tomorrow is going to be interesting. If we don't catch a bid, I think after that first push lower, I think that could be an aggressive sell short day tomorrow.
Yeah, I definitely agree.
Any other stocks that you'd like to make sure we cover, or are we good?
No, not really. I always watch Facebook, and I was pretty surprised Facebook held up as long as it did today.
Yeah, it gave it up in the last like half hour there.
Yeah, but it held up there. And so, I mean, if we do reverse and we start, that's what I try to tell the people in the room, look for the stocks that stayed the strongest, the longest.
Yep, and we run that scan every morning too. It's on the blog. Like, let's say the market was down today. Tomorrow morning, you'll see a list of stocks that were positive relative to the market trading lower. So again, you know what? I'm actually just going to pull that into the screen here for a second. So this here is the list that we're talking about. So you can see relative strength yesterday to SPY's negative change. So that actually stayed the same because the SPY was negative again today. So what we're going to look for tomorrow is stocks that were positive from the open today. So just a one-day divergence. And if the market bounces, those would be the first ones that you would say, all right, these stocks had strength when the market was weak. I want to take a look at those. So again, you can go to the blog and find this stuff every single day. Anything else? I think we're good there. We covered a lot, but I think really it's more the concept of what everybody should look at for tomorrow's open that I think helps the most.
Right. I definitely agree. And also look for a lot of inside anything that didn't break down from yesterday's price. So any inside days I think will be pretty powerful.
Yep, we've been keeping an eye on that VMW. I don't know if everybody's been watching that one too, but almost 3 or 4 or 5 weeks of consolidation now. So this one's kind of coiling to break out. So let's see what happens today.
See which way it goes.
All right, Marion, thank you. I appreciate it.
Thank you, and have a nice evening, and I'll see you in the morning.
Okie doke. Take care.
Bye.
Bye-bye.